Hello and welcome, my free thinking, freedom loving friends, and welcome to another Decrypting Crypto live stream by me, Wasim. I'm coming with you again this Friday with our last stream for the week, going through all the latest news updates, Twitter highlights, adoption updates, and market update. As always, things are always crazy in the crypto world with a lot of things happening. We're going to go through today what the SEC is trying to do to Binance and how the court has blocked them. Also, we're going to look at SBF and the FTX saga and how his parents are being dragged into it now because they've been found to have been accomplices in the whole fraud with the FTX saga, and looking at what's happening with interest rates in America, and also some with Kenya, what's happening with their dollar and the devaluation of their dollar. So without any further ado, let's go straight into it and look at what's happening with the SEC and the Binance court case. So, at Bitcoin.com, they're reporting here that SEC denied immediate access to Binance US infrastructure. So, in a setback for the government, the federal judge rejected a request by the US securities regulator to inspect the technological infrastructure of Binance US. The US Securities and Exchange Commission accused the American subsidiary of the leading crypto exchange of non-cooperation with its probe. So the SEC has been trying to get access to Binance's infrastructure and their software because they want to try and prove that the Binance US and Binance.com were related and they're not two independent companies and they're commingling customers' funds and so forth. However, Binance has not been Binance has not been cooperating with this, and so they took him to court, and the judge basically said, no, the SEC can't do this. They're overreaching in their request, and has basically blocked the SEC from getting access to Binance's software and infrastructure, which is a win for the Binance group and a win for Binance in general. However, Binance US is struggling right now with 98% reduction in their trade. They've lost their fiat on ramping. They're looking at becoming a crypto only exchange in the US. In Australia, they've also lost their fiat on ramping, so people can't transfer money to them via fiat anymore. So they are still struggling. They've had to cut down their employees in America by a third. With two of their executives, the CEO Brian Shorter and the head of legal and risk Krishna Juvandi and Sydney Majalia both left as they are doing job cuts. So even though it looks like they are winning the case, it is costing them quite a lot from both revenue as well as the legal case. So this is exactly what the SEC wants. They want to cripple these companies by going after them. Even if they lose the case, they still win because of all the heartache and all the stress that they cause on them. Now, next up is the US Anti-CBDC bill moves a step closer to passing. So I spoke to you guys about this on Tuesday night when we did the live stream, and I said that they are putting this through to the House Financial Services Committee, and I said that they're going to be looking at this. I think it was like Wednesday or Thursday that they were going to look at it. It has now passed, and now it's going to go to Congress, which is great. They've had 60 representatives in Congress already supporting this. So it happened a couple of days ago where they looked at this, and this is basically saying that the Federal Reserve cannot issue a central bank digital currency because it goes against the Constitution and it goes against American law. So what Representative Emma basically said: American values. This is what the future of digital economy needs. If not open, permissionless, and private, just like cash, a central bank digital currency is nothing more than a CCP, Chinese Communist Party style surveillance tool that can be weaponized to oppress the American way of life. So Emma and 49 other co-sponsors of the bill reintroduced it again in September after they introduced it the first time in Congress, beginning of this year in February, and now the bill has passed and now going to go to Congress. So it provides provisions that would prevent the Federal Reserve from issuing any CBDC to an individual to an individual person, meaning that the Federal Reserve can't create a CBDC. This is a win for us because we don't want CBDCs. And what I love is what he said here. If not open, permissionless, and private, just like cash, a central bank digital currency is nothing like a CCP. Now, what do we know that's open, permissionless, and private? It is Bitcoin. Bitcoin is open source network, it's permissionless, and it's private, meaning you don't need to KYC to be able to transact, and you can stay anonymous on the network when you're using it. Same ways when you use cash in the real world. I use cash all the time. I don't use my card wherever I can't, or I actually, if there are businesses that have card, I don't use them anymore. I only use cash wherever I can and only buy things with cash because it is open, it's permissionless, and private. No one can track what I'm buying. No one knows what I'm spending my money on, and keeps my privacy secure and safe. And this is what we're going to be. This is what we really need to be able to move forward. Someone said hi. I can't see your name. Hello. I don't know who you are, but hey, hello there from someone in our community. All right, next up, we've got another one looking here at a family affair. FTX goes after Sam Bankman-Fried's parents. So the FTX saga continues to unfold almost 1 year after the crypto exchange first filed for bankruptcy. Now, as we all know, in the beginning, Sam Bankman-Fried was actually was under house arrest and then actually put him in prison. He's been trying to get out. He's been putting demands on the court to get him out of prison. All his requests have been faced with a no. However, now FTX, the business, is actually dragging his parents into it and claiming that his father, Alan Joseph Bankman, and his mum, Barbara Fried, were both included and were running, were both early investors in Alameda, as well as running FTX as a family business. And they were taking millions and millions of dollars from FTX for their own lavish lifestyle, including houses and lobbying government and politicians and so forth. So now, because they are professors in law, they are going to be held accountable for this, which is great because they should know the red flags and the red flags that we have that they saw and should have done something about it to stop it. But they knew what was going on. They knew about the fraud, and now they're being dragged in. And this, if they win this, it could actually help make the FTX creditors whole again. So all the users on FTX may become whole. As we all know, in Japan, they've paid out all the people that had money on FTX. So those people are good. Now we want to see if they can do it worldwide. Moving on, we're going to look at the Twitter highlights. So let's have a look at, not Twitter highlights, we're going to look at the market update first. And as you can see, over the past week, it's been a sea of red with almost everything correcting except Luna C. I don't know why people are still trading Luna Classic. That is the only one that's up 9.4%, but everything else is down, as you guys can see. Bitcoin is also down 1.6% in the past 24 hours. It's still raging over 26,000, which is great, $26,627. However, the Bitcoin dominance is still high at 48.5%. Ethereum is down 1.7% in the past 24 hours at 1,592. BNB at $210, as well as XRP at 50 cents right now. When we look at the crypto fear and greed index, we are still in fear. We've been here for a while now. It's been about a month or so since we've been in fear after Bitcoin had its correction down from about 30K. Look, Bitcoin has been obviously has been ranging, has been not doing much. It's been quite flat. So it's quite boring in the market right now. But we all know that is the quiet before the storm. Moving on to Twitter highlights. Let's see what we got over here. Okay, and first off, we've got breaking news coming out that the Fed has just passed its interest rate, has paused its interest rate hikes and will keep interest rates at the same level. So US interest rates decision is actually 5.5. It was forecasted at 5.5 and previously 5.5. So they haven't moved the interest rates. They are going to continue keeping interest rates. There could actually be one more hike of 0.25%, between now and end of the year, and another one of about 0.5% next year. But they are right now keeping everything, and they'll continue to pace reducing the treasury and their holdings. So it is quantitative tightening still. So we'll see what happens in 2024, because as you guys saw, I think it was like last couple of weeks ago, I reported that the CPI index and inflation numbers in America did come out higher than expected. Looking here at Robert Kiyosaki and what he said, he goes, I constantly get asked, what price will gold, silver, and Bitcoin be in 2025? My reply is that is a silly question. More importantly, the more important question is, how many gold, silver, and Bitcoins do you have today? Gold, silver, and Bitcoin are bargains today, but not tomorrow. America is broke. Buy gold, silver, Bitcoin today before stocks, bond, real estate, cash, and people rush to gold, silver, and Bitcoin. So he's basically saying that we are in a bear market. You should be buying right now. This is the time to accumulate. Basically, what I've been saying to you guys all year is this is the year for accumulation, and you need to be buying as much as you can. Next up in Twitter, in the Twitter world, what do we have on X? We've got here Rufus Kamu, who's come out and basically is talking about the Kenyan shilling that has lost 19.2% since January 1st versus the US Treasury, which basically means if people in Kenya had transferred their cash to US dollars, they would have made 24.9% return this year, because in Kenya, their interest rate, the inflation is 6.7%. Meanwhile, in America, 3.7%. This is how America exports their inflation, guys. But other countries losing value against the American dollar, they prop up the US dollar, so that other countries actually pay the price by losing their value. Last, we are looking at the adoption highlight. So let's look at what's happening here in adoption highlight. Okay. Oh, this has been here we go. So Tether acquires a stake in a Bitcoin miner, Northern Data, hinting at AI collaboration. So the firm behind Tether has invested an undisclosed amount in a German-based crypto miner, Northern Data Group, and is in a move backing artificial intelligence initiatives. The company denied a report from Forbes regarding a $420 million investment, but declined to give specific amount when reached for comments by Cointelegraph. So Tether, who's behind USDT, which is one of the strongest stablecoins on the blockchain, is the largest one by market capitalization. It is outside the US, so the United States government can't get to it like they did with BUSD and USDC, because they are outside the US, so they actually hold their own dollar backing in the bank. So this is a pretty safe stablecoin. And they basically said that they are now looking at investing in Bitcoin. So they've been quite strongly focusing on investing in Bitcoin all year round. Next up, we've got Bitcoin to stack them up. Inactive BTC supply hits all-time high. So I've been reporting on this quite a bit. Bitcoin has been is being taken off exchanges like there's no tomorrow. And the reason for that is many people are realizing that they need to hold their own Bitcoin self-custody with everything that's happened over the past 18 months or so. And people are holding their own Bitcoin in their own accounts, in their own wallets. And we're seeing the lowest amount of Bitcoin in exchanges and the highest amount of Bitcoin outflows. For example, we've got Binance has 21,645 Bitcoins withdrawn last month. Coinbase also had 3,612 Bitcoin withdrawn in the last month. OKX is the only one that's actually had an increase in Bitcoin with 4,630 Bitcoins coming in. But what we can see here in this chart is that Bitcoin on exchanges is very, very low. Now, why is this important for us to know? Because when you know this, and you know when the bull run comes, when the Bitcoin halving kicks in, and there is such a low supply of Bitcoin on exchanges, we can see that's going to have a price shock, because people are going to try to buy Bitcoin. It's not enough Bitcoin, and it's going to make the price go up more and more and more. Last but not least, today, guys, we're looking at PancakeSwap integrates Transak for fiat onboarding on multiple chains. So PancakeSwap is a decentralized exchange. They offer a couple of onboarding options through MoonPay and Mercury. Now they're offering it through Transak, where people can use things like Apple Pay, Android Pay, and whatnot, and they can use these on multiple exchanges like the BNB, Ethereum, Polygon, and a few other exchanges. Pancake is one of the largest decentralized exchanges out there with $1.3 billion worth of crypto locked into contracts, and does about $150 million worth, $150 billion, I should say, in volume per day. So for them to start offering more ways for people to onboard and offboard their cash is really good, because we know what's happening with centralized exchanges. We don't know what they're doing. When you're working with a decentralized exchange, you're dealing with a contract, you're not dealing with someone else. So the contract will do what it's meant to do. That's it for me, guys. And for those of you that are going to be joining us tomorrow at our Digital Path to Prosperity, I'd love to see you guys there. We have got a massive, massive day organized for you guys. We're still working on a few little touches. So if you haven't registered yet, we've got a link in the Facebook group. Get in there, get your ticket. I would love to see you tomorrow. That's it from me, guys. Have an amazing weekend. If I don't see you tomorrow, peace out. And as always, stay crypto.